Yo, Market Scraper here. In this video, we're going to talk about a little bit about what to do for the coronavirus, COVID-19, how to prepare for that a little bit, should you be worried about it, and what to do not to be worried about it. And I just said COVID-19 and coronavirus. This video is totally going to be demonetized. Just kidding. My videos aren't monetized. Okay, now a little bit also about stock bottoms. Like, should you believe someone that predicts a stock bottom? Absolutely not. Stock bottoms are like the most difficult thing to predict and to get right, and it just takes an insane amount of calculations and so many different factors that can immediately make your prediction wrong the next day. And you should never trust anyone that thinks that they can get the stock bottom, and even that they should even try to do that. It's just ridiculous. Okay, now am I going to try to figure out what the stock bottom is in this case, in this video? Absolutely, I'm going to try to find out what the stock bottom is because it's fun, and just for fun, this is for funsies. Okay, now let's jump into this. Okay, now before we get into this video, don't forget to smash that like button. It really helps with this content, helps other viewers see this video. And if you haven't already, definitely consider hitting that subscribe button. Really appreciate it. Okay, now let's get into this. So I just went to Trader Joe's yesterday, and this is what it looked like. This was the canned food shelving area where they had other things with jars, and there was nothing there. Other places in the store, other aisles were all empty as well. I went to other stores later that day as well, and similarly, they were bare. And if you weren't worried about the coronavirus yet, maybe you would start worrying about that. I mean, it's a pretty weird sight to see. You go to a grocery store thinking that there's going to be stuff and food there and what you want to buy. I mean, you might have a specific brand of oat milk that might not be in the store that you're looking for, but in general you're going to find at least an alternative to what you're looking for. And it wasn't that way, and this is just, in my mind, like 20% of people just starting to get into this idea of they need to get extra food, extra things to prepare for what might be coming next. So when more and more folks start to be aware of this, we're going to see huge and massive lines, and maybe some people in some areas are already seeing massive lines. I know that when I sent this out to some friends and family, some folks were like, oh no, the stores are just fine for us. We have a Trader Joe's, and I was able to buy the food that I wanted, didn't see any shortages there. And others, people are saying, yeah, I went to Costco and I didn't see any toilet paper there, and things like that. So there's definitely starting to be a trend. People are prepping a lot more, getting stuff. And so why are they doing this? Why shouldn't you might be doing this too? So before we get into that, should you be worried? Well, and are you worried? And what to do about that? So the best thing to do to not be worried, and if you aren't worried, the best thing to do anyway is to just prepare a little bit. Buy some extra food that you'd buy anyway, especially canned food, maybe some dried food like pasta, jar food, pasta sauce, things that you'd buy anyway that you'd like to make that is something that stays for a long time, sardines, things like that. Just buy some extra things like that, and that will help you not be a financial burden because you'll be able to eat this food anyway, the food that you'd normally eat. You should have some extra food, so you won't have to like go to the store when you really need toilet paper and have to wait 4 hours in lines potentially. I mean, I have no idea what the lines are going to look like in the next several weeks, but you don't want to wait in line that long, especially if the virus is getting a lot more people infected. You don't want to expose yourself that long to potential risks as well. Maybe that's a thing, maybe that's not a thing, because if you have your hazmat suit on, who cares what's going on around you? Just kidding, sort of. Just prepare a little bit extra food, things that you would normally have, just so, and maybe some water even. I don't really fully understand why you need more water, but in general, rule 101 for any kind of disaster, whether it be earthquake, any natural disaster, you just want to have a little bit more water on you. So that's what the water thing is, I guess. So might as well be more prepared, and it'll also let you not be so worried about the future because you know that you have the stuff you need. And besides that, what can you do to prevent yourself from contracting the virus and helping not spread it to other people? Well, just do the basic things that you do for any time you get sick or don't want to get sick from someone else. You want to wash your hands regularly. You can even use hand sanitizer. Hand sanitizer is a good way to, help when you can't wash your hands right away, because you don't always have running water every 5 seconds next to you, available, right? So handstand helps, and definitely when you use handstand, usually make sure you wait at least 15 seconds for it to help to potentially ward off any viruses that might be on your hands. And hand sanitizer arguably isn't the best thing at killing viruses. It's really good at killing bacteria. So look into see if your hand sanitizer is good against viruses or not. And no one really knows about this one, what's good at killing this or not. So, but it's good to do things and to be vigilant in the things that we can do. And so hand sanitizer and washing our hands are things that we can do. And besides that, are masks a good idea? I think that masks are generally a good idea, and the reasons why are twofold. One, it helps you prevent touching your face, because actually touching your own face is the way that you'll probably get it. There's 3 ways you'll probably get it. Either one, you might touch something like a doorknob, and then in turn touch your face, your eyes, your mouth, things like that, and then that's one way. The second way is that somebody will sneeze, and that you'll get hit by that sneeze, and again it goes in your mouth, your eyes, etc. And the third way is this virus is known to spread through, I believe, fecal matter. And so what that means is that if you're in the bathroom, you need to have really good hygiene there, because that's the third way that it really could spread too. That's a little bit about the coronavirus, some things around there. Okay, and so masks, absolutely. And I should be mentioning this, but also social distancing. And since I just took my mask off, and you don't know if I have it, so social distancing is a good idea. So stay a little bit away from the screen, actually, so that when I'm talking to you, you'll be okay, especially since I don't have a mask on. So yeah, just kidding. But another thing to do is that when you have a mask, especially if it's not a reusable one, it is a worry to have it become too wet, and then it kind of it doesn't protect you from viruses as much. So be careful. That might arguably be more easily to get the virus contracted actually. So generally make sure your mask isn't wet, but more than anything, I think it is a net positive because it'll prevent you from touching your own face. So I think generally, regardless of the mixed news that I've been hearing about masks being good, masks being bad, I think it's generally a good thing, especially since this virus, you don't know if you have it for like potentially up to 14 plus days. So let's say you have it, and if you're wearing a mask, that's instead of until you get sick, you wear a mask to prevent the spread to other people. Well, you're preventing the spread to other people right off the bat. So I think that masks are a great thing, net positive. Have I started wearing masks every day at work? I have not. I've actually brought it every day to work for the last month. But I'm waiting for one other person to start wearing a mask, so I'll wear my mask, kind of thing. Yeah, I should be the trendsetter. Okay, now about stocks, and about why you should never try to find the bottom and listen to people that find the bottom of stocks. But we're gonna go ahead and do just that thing right here. Okay, now, so this chart over here, this is the Vanguard Sp 500 ETF, VOO. This is a great ETF that tracks S&P 500. Happens to be an ETF that I own, has a low expense ratio, great ETF. So this is what kind of happened in the last week. We dropped over 10% super quickly, went to 271.74, and the all-time highs on the 19th we were at over 310. So pretty significant drop here. A little thing about the indicators here that I'm going to put on here, and also we're going to talk about moving averages, and also take a look at the last little pullback that we had and how I use the moving average to analyze this pullback and find a bottom. And we're going to try to do that same thing for the current situation. So here, when we were back earlier this month, end of last month, at when we were going down a little bit, indicator I was looking at was the moving average, and I was looking at the 50-day moving average. And this is actually kind of the shallowest moving average I was looking at in terms of where I thought this pullback might go. And if we look at here, we kind of just hit this moving average. And if we look actually at the candle chart here, we see that we just touch it and then we bounce off of it. So I was looking at this thinking this might be a bottom here and good buying opportunity, and seeing if we go back up from there. And in fact, we ended up doing that. Wouldn't be surprising if we broke below that, but also would be surprised if we had a small bounce from that. And in fact, we had that. So now let's look at the place where we are now, and if we can find a moving average that fits the current scenario. So we're still looking in the candle chart here. So we're looking at the daily interval. So we closed up here, but intraday we went all the way down here. So I'm going to go back to the line, and I'm just going to go switching around a little bit. So used to using a simple thing as Yahoo Finance to look at this chart. And so this is in Yahoo Finance. You can search for a chart. You can expand that chart and see this view. You can put indicators, you can draw lines, and basic things like that. It's a quick thing to do if you're not doing something too fancy. So for this here, we blew past all the daily moving averages. So we're going to look at the weekly moving averages. So we're going to set this interval to 1 week. And so we can now see the weekly moving averages. So we blew past the 50-week moving average here. So why is looking at a weekly moving average useful? Well, let's look at another example way over here in 2018, where we had a massive crash. Kind of like we're having a massive crash right now, right? So if we look over here, what moving average might have been useful to look at when this crash was happening? So let's add the indicator, add another moving average, and let's look at the 200-week moving average. And with that, we see this. Well, it doesn't look like it matches so well, but if we look what happened intraday, we can see that we just touched this intraday. Let's zoom in here. We bounced right off and closed high. So let's stick with this candle chart view, and this is the weekly candle chart view. So each candle represents 1 week, and intraday it shows you the range. So what can we look at here that might indicate if we're at a bottom or not? And this might be a near-term bottom. We might go down below it eventually, obviously on worse news. So let's add a 100-week moving average and see where that puts us. Okay, so this actually puts us in a place where we just passed it a little bit, kind of like we just passed it a little bit in that December time as well, and we bounced off rapidly, just like we bounced off pretty significantly here as well. Because when we go down to what happened, so this was just intraday, the closing basis happened up here, intraday went all the way down to this 100-week moving average, but it rapidly went up in the session back up to, instead of being down way at the low of 264, it bounced all the way back up and closed again at right under 272. So this here could indicate, like the examples that we used in our historical analysis of this, could be a near-term bottom that we might see. Now, does history predict the future? No, it absolutely does not. And remember, should you listen to somebody that's trying to find the bottom? No, you should not listen to someone who's trying to find the bottom. The bottoms are ridiculously hard to predict now. But what this can do for us, because you have to have some strategy of when you're going to start putting your capital into the stock market when it's crashing. This level of this 100-week moving average, this could be an area where you deploy some money here. This is what I'm going to be doing here. I'm going to starting to add some money, thinking that we might have a nice little bounce off. We might come back and retest the 100-week moving average. Now, another thing that this helps us with is that if we have a day that closes below the 100-week moving average, I wouldn't be surprised for us to see a lot lower lows. I wouldn't be surprised if it's to blow past the 100-week moving average. We might retest it. It might be resistance actually, and then we might go back all the way down, maybe to see the retest the 200-week moving average like we did in December of 2018. So this just gives us a few levels to look at instead of just kind of buying in blindly, thinking about what's going on with coronavirus and thinking what's priced in, what's not priced in. This helps us just have some concrete levels of when we might want to buy in, when we even might want to take assets off the table. For example, if you're doing more of a swing trade and you want to, or if you want to preserve some capital, because if you think that we break this 200-week moving average, maybe we're going to be in for a lot more pain than ever expected. Because if we look back at this chart here, when's the last time we broke the 200-week moving average? The answer is we haven't. In this whole bull run here, we've never broken the 200-week moving average. So that's definitely would be a really concerning sign on a technical perspective if we ever break the 200-week moving average. So those are my thoughts about trying my best to look at where we might be in terms of a bottom, and if we break below this level, what we might expect from there moving forward. Well, I hope you guys enjoyed this video. Don't forget that this is not financial advice. Full disclaimer in the description below, and stay safe, and I'll see you guys in the next one. Thanks for watching.